Hi there, welcome to Kneppy Invest. Time for my weekly technical update where I focus on charts, looking at lots and lots of charts. And in today's episode, we're going to be focusing on 10 ASX companies, including Commonwealth Bank. Now, Commonwealth Bank has a special place in my heart because not only was it my very first banking account was with Commonwealth Bank, my very first real job was with the Commonwealth Bank. And my very first shares bought were actually Commonwealth Bank shares. So always have a little bit of an interest in this company. It is by far, in my opinion, the best of the four big banks on the ASX. So those are Commonwealth Bank, Westpac, ANZ, and NAB. I'd probably put Macquarie Bank ahead of Commonwealth Bank, but I think it's unfair on those four big banks to compare to Macquarie Bank because Macquarie Bank is a different beast altogether. So I haven't really looked at Commonwealth Bank before in any of my videos. So I thought it's about time to have a look at the chart for Commonwealth Bank because the share price is almost at an all-time high. The other 9 companies we'll be looking at in today's video include, I'll be looking at a couple of behemoths on the ASX, including CSL and the conglomerate that is Wesfarmers. Both of those charts are looking interesting. Share prices are looking like they might be breaking out. Kogan, fairly positive sentiment behind the share price movement of that company. Finally, because the share price has taken a massive dive over the past, we'll say, almost 2.5 years now. The share price did reach a high back in October 2020, and the share price took a bit of a dive when they came out with the vaccine. A company I have not looked at in the past, Reece, is a high-quality company on the ASX, and I'll probably have to do a standalone video on that company because I don't know exactly, I don't know what they do, but I haven't taken a very close look at that company. I believe they are a founder-led company as well. This is the second time I've done this particular slide because I completely confused Latitude with another company called Liberty Financial. In fact, when I got to the Latitude chart, I started talking about Liberty Financial until halfway through that particular slide. And when I realized I was looking at the Latitude chart, but talking about Liberty Financial. So the other 5 companies I'll be talking about in this particular video are Universal Store, Booktopia, MI Financial Group, Doug, and Latitude. Now, I heard someone describe MA Financial Group as a mini Macquarie, and that really perked my interest. So I'm going to do a little bit more research on that company. I have talked about Doug in the past, and a few positive announcements from that company has really driven the share price of that company higher from when it is, including a really positive quarterly update from the company. Booktopia share price has gone a really good run over the past 2 weeks on the back of a positive business update released on 23rd of January, and Universal Store and Latitude charts are starting to look a little bit more bullish, looking like they want to move into an uptrend. But first, let's have a look at the Commonwealth Bank, and we'll have a look at 2 charts. First one here is the daily chart going back to April 2021. The next slide, we'll look at the weekly chart. A few interesting things when you look at this daily chart over the past almost 2 years. Yeah, 2 years. And the main thing you'll see here is there's no trend in the share price during this period. Shares have been going sideways, but when the share price of Commonwealth Bank gets between about $108 and $110, we do see the shares pull back. In fact, the share price has got into that zone between $108 and $110 4 times in the past 2 years, and the share price pulls back. And recently, the share price got back into that zone in the last week or so, and the share price kept on going up and then moved above the top of that zone. And currently, at the end of trading on the 3rd of February, the share price closed at $111.15 above the top of that zone, which means it's moved through resistance. So right now, the share price of Commonwealth Bank is at an all-time high. So just by looking at this chart and knowing nothing else about the company, that's a fairly bullish sign moving forward. So Commonwealth Bank and shareholders would hope this is a sign the share price is going to move higher from here. But there are a few things I am wary about Commonwealth Bank in terms of valuation. So the P ratio right now for this company is around about 19. And I will trade the banks on occasion, and it's usually around the valuation. So I have been quite successful doing this strategy in the past. when I see the P ratios of the banks get to fairly low levels, so we're talking about 10 for the three non-Commonwealth Bank companies, so that's ANZ, NAB, and Westpac. If I see the P ratio of those three companies get below 10, I will take a position because that is fairly low for those three banks. For Commonwealth Bank, because it is the better of the four major banks, there is a bit of a premium. So if I see the P ratio of this bank get to about 13 or even 12, that's when I'll think about taking a position in the Commonwealth Bank. But right now, with the P ratio around about 19, I think there is an argument that Commonwealth Bank is overvalued. Now it gets back to the growth in this company. So one of the things I will look at is revenue per share growth. Also look at earnings per share growth as well. And that has improved over the past 10 years. But when you look at revenue per share growth, it has only been growing at 0.2% per year for this company, which means they are more efficient in their business. For example, probably cost cutting. They've done a fair bit of cost cutting over the past 10 years. So I'm not sure if I mentioned this, but that 0.2% growth in revenue per share has been over the past 10 years. So over the past 10 years, they've probably closed down regional banks, outlets, whatever you call them, other cost-cutting saving things, and that has improved the efficiency of the company's revenue and profits. So more than likely, they have improved their earnings per share, but have not improved their revenue per share. Another thing to be wary about is the increase in other financial tech type companies, which are competition to the four major banks. So I think there is a definite scenario in the future with this company, along with the other major banks, loses a lot of customers. So that's another thing to be wary about, the Commonwealth Bank of Australia. So at this point in time, I have no inclination to take a position in this company, even though the share price has broken above that resistance level just based on valuation. If we take a look at the weekly chart for Commonwealth Bank, this goes all the way back to 2007, so about 15 years of history here. Generally, the share price of Commonwealth Bank has gone up. So it's gradually going higher and higher, and right now we're at an all-time high with the Commonwealth Bank shares. But there have been periods of time here where the share price has moved into a really nice uptrend. So during the period between 2012 and 2016, share price of Commonwealth Bank went from about $47 to about $92. So not a really good capital return over this 15-year period. But when you add on to the dividends you would have received, you have had fairly good average returns from holding Commonwealth Bank shares. So I have no idea what's going to happen with the Commonwealth Bank shares over the next 15 years. I'd probably argue that more than likely the return won't be as good as you have seen over the past 15 years, but I could be completely mistaken. So I think this also comes back to if you are a shareholder, when you bought shares in this company. If I bought shares in this company at the IPO, I'd be laughing all the way to the bank because you've had a really nice capital return, really nice dividends, and probably no reason to sell out of this company at this point in time because you have to pay taxes and something like that. So I think it all depends on your point of view when it comes to this company. Because I am not a shareholder right now, because the shares are at an all-time high, because of the valuation of this company, I'm just going to stay back and just wait for any significant decrease in the share price before I even think about taking a position, not only in this bank, but the other three major banks. On to one of the other biggest companies on the ASX, CSL, a little bit different than the Commonwealth Bank. CSL has been growing. This is the type of company you're going to get, or more than likely will get capital returns plus dividends and growing dividends at that. The main feature when you do look at the CSL chart, and this is the daily chart going back about 1 year, is a breakout from a resistance line or resistance zone between $300 and $304 on the last trading day of the week, February the 3rd. A really nice bullish candlestick, a one-day candlestick. Share price up 3% on that day, and the shares closed at $313.08. So a nice little bullish signal on the last trading day. Now, mind you, if you go back 3 years, where we did see the share price high back in 2019, shares of CSL have been in a trading range during the last 3 years, going sideways. that's not a negative thing for companies with a high PE ratio. So CSL has a premium attached to it because of the quality of the company. And a lot of these premium companies sometimes will see the share price go sideways for a long period of time, and that's very healthy. And that's what's been happening to CSL over that period of time. So share price of CSL is trying to move towards the top of that trading range, that high we saw back in 2019. Don't think I have a weekly chart for CSL right here, but we are seeing the share price move towards that top of the range. If the share price gets to a record high, new all-time high over the next few months, that will be a very bullish thing moving forward for CSL. I have turned a little bit more bullish about Kogan over the past few weeks. Things are starting to look a little bit more interesting for this company. Share price fell from $25 or something like that back in October 2020. So this company was affected by the news of the vaccine because of that whole thematic, people have to shop at home in regards to COVID-19. And this was one of the popular COVID-19 stories. And then as soon as that vaccine news came out, that was the end of that sort of tailwinds behind this company. And the share price fell from $25, I think the high was around that level, all the way down to a low of $2.70, which was reached in July last year. Just after that low, towards the end of July, we saw a really nice update, and that was the first sign that the low might have been reached. But we didn't see much buying after that. Share price just drifted down lower. But that was really the start of a consolidation period where the share price just went sideways or just drifting very, just gradually lower. And then since the start of the calendar year, really from the first day of trading in 2023, we have started to see the sentiment in this company start to change from highly negative to neutral and maybe back to positive or even slightly positive. The share price has been moving higher ever since the start of the calendar year. Share price actually, in fact, has gone from about $3.50 to a current share price of $4.60. Right now at $4.60, it's a fairly similar level than the highs we saw back in late July. So that is a little bit of resistance zone right now. And if the share price can get above about $5.20, that would mean the shares of this company are at about a 7 to 9 month high. So it is starting to look a little bit more positive for Kogan right now, with the share price starting to trend higher on some pretty good volume as well. So that's one thing I look at, is some good volume. Not those really sort of volume days where we saw in late July where there was this one day peak in volume. We have seen consistent, pretty good volume since the start of the calendar year. And that's actually another good sign that the market is starting to get interested in this company at these valuations. So all eyes will be on some of the financial news this company would release. If this company releases any profit upgrades, that would really put a rocket up the share price. From Kogan onto one of the biggest companies on the ASX in terms of market cap, a conglomerate that is Wesfarmers. They own Bunnings, Kmart, Officeworks, Target. They also have a lithium mine. Not sure that lithium mine is in production. They also manufacture fertilizers and chemicals, that sort of thing. So a lot going on for Wesfarmers, and the chart is looking a little bit more interesting over the past few weeks. So the share price was in a downtrend through most of 2022. Share price then started to go sideways in the second half of the year, and it does look like since the start of the calendar year 2023, the share price is trying or has broken out above a nice little resistance level at $49, and the share price has moved into an uptrend with a higher high and a higher low. Last time the share price was this high, at the end of trading on February the 3rd, the share price was $50.68. Last time the share price was that high was way back in March of last year. So we're almost at a 10-month high, 11-month high with Wesfarmers shares. So it does look like the share price is wanting to move higher from here. So I am thinking about taking a position in this company just based off this chart. Now to a company I have not looked at in depth in the past, and that is Reece. I'm pretty sure they sell bathroom and plumbing supplies at their stores. I'm pretty sure they are a founder-led company, which is always enticing to me. So just like many other companies on the ASX, 2022 was not a good year for Reece. In fact, the share price reached a high of $28.50 on the first day of trading in 2022, and then fell all the way from that $28.50 to $13. So share price more than halved in 6 months because that low was in June last year. So a lot of companies on the ASX did reach their low or their yearly low back in June. That was a low in the market. And from that low, the share price then just started to go sideways, sort of trading in a zone or range between about $13 and $16.50. It did look like during the past week, the share price has started to want to move up into an uptrend, but that resistance level was there at about $16.50, which was the highs we saw back in August. And then on the Thursday, the 2nd of February, the share price moved above that resistance level on fairly good strength, a nice little one-day candlestick. And then the next day, on the 3rd of February, the share price moved even higher. So currently, the share price is at $17.32. The last time the share price was this high was back in late April, early May. So just like Wesfarmers, the share price of Reece has moved above a resistance level, and the share price is now at least a 6-month high. So this is another company who I am going to take a closer look at just based off the chart. One thing I'm always doing is looking for turnaround stories. Now, not every single bad story turns into a good story, but possibly, just possibly, Booktopia's story is starting to turn from highly negative to positive. And that's based off what's been happening with the share price and some of the news flow from this company over the past 2 weeks. Now, 2022 was really a bad year for a lot of companies on the ASX, particularly the first half of that year, with many of the share prices of those companies falling by more than 50%, like Reece, the company I just showed you a few slides ago. But for Booktopia, the bad news really started in the second half of 2021. The share price of this company reached a high of about $3 in July of August of 2021, and then went from $3 all the way to a low of about 17 cents in June of last year. So yes, in 1 year, the share price of this company went from $3 to 17 cents. But from that low, and after a little bit of rally in the share price, we just saw the share price of Booktopia go sideways, or just gradually drifting lower. And then on the 23rd of January, the company released a business update. And I do recommend having a look at that business update because the market liked it. Share price rallied 34% on the back of that business update. You can see that pretty big one-day green candlestick. The share price finished at the high of the day, which is actually fairly bullish signal. And then over the next 7 trading days, the share price went sideways. There was no selling, sort of like a flag little setup there. And that's actually a really bullish signal that there was no selling. A lot of times you will see after a very big update, a fair bit of selling comes in. Have a look at Money Me chart. They had a really big update, something like 60%. And over the last 3 trading days after that big update, we have seen selling and 3 big down days. Not as big as the update, but we have seen a fair bit of selling coming in for Money Me. So just compare Money Me's chart after that big update to Booktopia's chart after the big update. There's a big difference. Share price of Booktopia just went sideways. And then on the 3rd of February, we saw another big update, not quite as big as 34%, but the share price rallied another 14.3% and closed at 32 cents. Now, the last time the share price of Booktopia was at 32 cents was back during that rally we saw in July and August. So there is a little bit of resistance right now at these levels for Booktopia. The other thing I would have liked to see is a little bit more volume coming in during the past 2 weeks. So it's on low volume. So there's not a lot of strength, or not as much strength as I would like to see with this rally in Booktopia's share price. But the main thing is this rally in the share price was on the back of a business update. The market liked it, share price rallied, and that's a good sign moving forward for Booktopia. I have featured Doug, the company, not to the person, in quite a few of my videos, and this is starting to look a fairly bullish chart. However, the share price rise over the past month, in fact, it started really in December, has been a little bit stronger than I would like. And it has been on the back of some pretty positive news, including a contract. They announced to the market on the 2nd of February, which pushed the share price above 85 cents. And the last time share price was 85 cents was back in October 2021. So the share price of Doug right now is at a more than 1 year high, and that is a bullish sign. So the share price was in a pretty well-defined downtrend up until December of last year. So only 1 month ago, the share price of this company was in a downtrend, and that downtrend came to a sudden end, and the share price has moved into a pretty good uptrend on the back of some good financial news, a really good quarter from the company, and also some contracts the company has won as well. So this is a pretty bullish looking chart right now. The main thing I ought to be looking for is a little bit of a pullback in the share price, but we haven't seen much or any pullbacks in the share price since the share price has been running in the middle or from the middle of December when the share price was at 52.5 cents. One of the reasons I became interested in MA Financial Group was someone comparing this or calling this company a mini Macquarie Bank. I do like Macquarie Bank, and if anyone describes any other company as a mini Macquarie Bank, I am going to take an interest in that company. Now, the company did have or release a negative trading update a few weeks ago, about the 14th of January. And on that day, the share price fell 8%, but then the share price recovered really quickly, and understandably so. And I did a video on that particular negative trading update, and I wasn't surprised to see the share price rally. But the share price has continued to rally over the past few trading days, and it does look like possibly the share price is wanting to move into an uptrend. Now, the share price at $5.28 isn't a long-term high. So last time the share price was this high was only back in September last year. So we're only talking about a 5-month high in the share price. Preferably, I would like to see at least a 6-month high, because there would be resistance moving forward, because all those shareholders who bought in at higher prices in the past year or so, so during financial year or calendar year 2022, will see the share price rally and take the opportunity to sell out, and they become resistance. So it's all about psychology. And a lot of shareholders, a lot of investors, when they buy into a company, naturally expect the share price of that company to go higher from when they bought in. And if the share price goes lower from when they bought in, they automatically assign that company as a dog stock. I have heard this countless times from people I know, people I work with. In fact, I've heard people I work with say, well, I'm holding onto these shares now, but when the share price gets back up to where I bought, I'm going to sell at that point in time. They don't call it a dog stock, but that's that mentality. When a share price falls, they want to see the share price rally back up to where they bought in, and then they sell. That's what's called resistance. So there's going to be a little bit of resistance moving forward for MA Financial Group. I do think the value, I had a very quick look at this, and the valuation does look attractive at current levels. And the very fact the share price is looking like it's moving or trying to move into an uptrend makes me want to research this company a little bit more from how much I know about the company right now. The second last company I want to talk about is Latitude. I don't know much about this company, to be honest with you. It is a recent IPO. When I say recent, I'm talking about 2, 3, maybe even 4 years ago. The share price has been a downtrend since they listed on the ASX. So that has given me no reason to do any research on this company. The only thing I know about Latitude is they did try to acquire some parts of Hum, some buy now, pay later parts of Hum. So more than likely they're in that sector. And because the overall market, or what was happening in the overall market in 2022, particularly in buy now, pay later, that deal fell through. You can see that sharp drop in the share price back in June last year. The share price fell from $1.80 down to about $1.07, and then the sharp recovery, V-shaped recovery. So the share price of this company has been gradually decreasing. Nice little well-defined downtrend, but it does look like that well-defined downtrend has come to an end. The share price was going sideways for about a 3 to 4 month period, from about September all the way through to January of this year, so 1 month ago. And the share price does want to, or looks like it wants to go higher from here. A little bit of volatility in the share price during the past few weeks on pretty low volume as well. So at this point in time, just the share price is wanting to go higher makes me think I should do a little bit of research on this company. I think the market cap of Latitude is about $1 billion, so they should be profitable and they should be a pretty big company. So more than likely, I'll do a standalone video on this company just to see, just to give me the impetus to do some research on this company. The last company I want to look at is Universal Store. They own a group of retail companies through Australia, maybe even overseas. Although, to be honest, I don't know much about Universal Store. On occasion, I will walk past the Universal Store and have no inclination to go inside because I am not their market. I'm pretty sure Universal Store's market is teenagers, people without mortgages, those sort of people. And to be honest with you, I have no desire to go into a Universal Store. But just because I don't have any desire to go into a Universal Store doesn't mean they can't be successful. And we have seen the share price get out from a pretty nice, well-defined downtrend. Share price reached a low of about $3.20 back in June. Again, the low in the share price for this company was in June, just like many other companies on the ASX. And then the share price was in this nice little consolidation period. That consolidation period started in August and then really finished, I don't know if we can say with any confidence that it has come to an end, but it does look like the share price is trying to move higher. The share price went up to $6.20 about a week ago from when I'm recording this video. The last time the share price was $6.20 was back in March of last year. So the share price is trying to get to 1 year high. So this is one of those retail companies that is looking interesting and more than likely won't be affected by higher interest rates and higher mortgages. The reason I say that is because predominantly their market is those sort of people who don't have mortgages. That's all I have for this technical update, looking at Commonwealth Bank and 9 other companies on the ASX. If you have any questions about any of these companies, I'd love to hear your thoughts. So leave those thoughts or questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.